Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. May beans continue to move lower, and the next key area of support currently sits at about 350. The market right now is sitting at about 360, and it is on its way down as it has been tracing our natural trend line on the way down. Upon getting to about 360 or so, should that happen over the next couple of days, the market should find a reasonable support near that 350 area, and from there the market could very well start to taper back up again. We're looking for the market to possibly find a bottom in early April, and right now we're looking at about 2 weeks from now. At the end of the month, we do have what quarterly report coming due, and that too should play a key role in giving us better vision in terms of market direction. From this perspective, we can see that the market is currently sitting right inside of volatility-based support. And at the bottom end of that support band, we have 354 as key potential support. But jumping down just below that, we see a new set of bands that should develop that are consistent with that 350 number that we just discussed. So as long as the market continues to kind of trend its way down here, we do believe something in the neighborhood of 350 to 354 should prove to be very good support for this contract. We can see a similar pattern for the July corn contract on its way down its natural trend line. And if we look back in history, we can find that its support level sits at 360. And so that's the number that we're looking at, given that the market currently is trading near 367. An alternative view, once again, shows that the market is sitting right up against volatility-based support, with our next band or our next region coming in somewhere in the neighborhood of 356 through 360. And so that's going to be our two key bands of potential support that we're looking at as we approach the quarterly report on the 31st of this month. The support level for the December contract sits at 376. Market's currently trading at about 382. And so again, what we'll be looking for is for this market to potentially come down, test that 375 to 376 area where we can find pretty good support. Volatility-based support for this contract sits in the neighborhood of 374.5 to 377. The next band that we're looking at just below then would give us a range somewhere in the neighborhood of 370 to 374. May beans has been holding serve near the $10 mark, and this looks to be a very key area for this contract. Right now, what we've seen is a very tight consolidation after having come down very fast. And if the market here is able to hold this consolidation and turn back up off of support, we can see the market maybe move up and potentially test something in the neighborhood of 1020. If the market fails from here and breaks below the 990 mark, then we could very well see another move to the downside that perhaps mirrors the advance that we saw on the other side in terms of a breakdown. In all likelihood, we believe right now that the market could very well hold serve near this $10 mark, potentially marginally break it. But as long as it stays above the 990 mark, we think the market can potentially hold up here. From this perspective, we can see very well that the market is holding well inside of volatility-based support. And as would be expected, typically when the market enters into a volatility-based support zone, we expect to see the market consolidate for about 5 to 7 trading bars. Exactly what we're seeing here. And one of two things obviously can happen. The market can either break out of this zone and drop a bit or turn back up again. But from what we can gather, it looks like the market could very well get some legs and look to turn up a bit. Additionally, we can see our sinusoidal natural wave here is holding the market up pretty well. And you can see the movement that we see in the lows is very consistent with the curvature that we're seeing in this trend here. So if the market's able to finally turn up and perhaps get above 1013, we can perhaps see the market really get out of the woods here, find some resistance again near that 1020 mark, and then potentially have one more small draft back down again before it's able to get some legs post the South American harvest. We have the same setup for the July contract, although for it, 1010 happens to be the number where support lives. Now, the market is up a bit today as it was marginally up yesterday. And so again, the same information we're looking at here. And so long as it holds above this $10 mark, this market has a good chance of holding itself up and potentially making its way higher to find resistance perhaps near the 1030 mark. Here we can see that volatility-based support came in right inside of where the market has been trending, with the top end sitting at 10.15 and the low end of the region sitting at right about $10. So from here, we're looking for the market to potentially hold serve and look to move up and find potential resistance somewhere in the neighborhood of 1030. For the November contract, the top and bottom end of support and resistance lives at 9.90 for the low and overhead at about $10. So from here we can see very well that we have the same pattern, although unlike the other two contracts, we have a triple top unlike the series of lower highs that we saw before. We have previous support coming in at 980, and 980 looks to be the area where this market can potentially find good support in the event that it does break below this key 990 range. Volatility-based support from this contract lives at 975 up to 987. Right in the middle of that range is the 980 number that we just discussed. And so again, 980 looks to be a very important area of support for this contract, as it was several months ago. July wheat appears to be in a little bit of trouble. We talked about the distance of the decline previously. And when you copy that distance up to the next move, we're looking at a one-to-one correspondence near where the market is currently touching. If the market drops much lower than this area, then we're looking at another leg down that should potentially test the previous low that we saw in late December / early January. Another key demarcation is now that the market is testing the one-by-one downside angle, and now that it is below it, look for the market to be stronger above and weaker below. So posting several closes below this downside one-by-one angle tells us that this contract potentially looks to be weaker. From this perspective, we can see exactly where that one-to-one correspondence comes in. That number was at 440.75 for a 100% correspondence of the two lengths, or the two moves that we just saw a moment ago. So the current market sits right at volatility-based support. The top end of that region is near that 440 half number, and the bottom end of that region is near 431.25. Once the market hits this area, we might see a bit of consolidation, maybe 5 to 7 days. But then the next area that we're looking for really has not yet set up, because as we can see here, these bands continue to make their way down and have not yet given us a curvature suggesting where the new volatility-based support bands may live once the market breaks this area. Again, suggesting that there is a good chance that the previous lows can be violated. The December contract has not yet gotten down to the one-by-one angle, but you can see the market is very close to breaking it. So you can see from here, upon breaking this area here, this can tell us that the market could very well be headed lower. Like its other counterparts, this market too is actually coming in at volatility-based support. But upon breaking through this area, we can again see that we do not yet have definitive indication as to where the next key support level will be in terms of volatility movements. But if the market's able to hold this area here, then we could see a small bounce again, but in all likelihood, we're looking for the market to continue lower. Crude oil futures continues its descent. Now, we saw a small pullback for a couple of days and the market returned to declining measures. As we can see, the market got to a 180-degree angle at 49.21, held it very briefly and has since broken down back below. The market had a big down day today, but it has since recovered most of the day's losses. But in all likelihood, it's very probable that we're looking at a market that goes back to retest previous lows at 46.25 and can touch somewhere in the neighborhood of 44.64 with the possibility of getting as low as 42.44. From here, we can see that one standard deviation below the point of control sits at 45.16. So again, the market breaking down into these areas is not unlikely. We can also see the way in which that our volatility bands have made a very big drastic shift to the downside, and our next band has not yet given us a curvature showing where the next support areas could come in, suggesting that weaker prices are in fact ahead for crude oil. From here, we're simply looking to continue to trail stops behind any positions that you may have on, but given how much it has already declined, finding the proper area for re-entry may not be as easy. Thank you so much for joining us for our weekly market update.